Hello students, today we are going to take up the January 2025 mock revision test paper, Auditing and Ethics. So first of all, we have the multiple choice question which is based on the case scenario. Now here what we say, the question goes like this. Joy Limited, a company engaged in the business of trekking essentials, appointed CA Raj as the statutory auditor for the year. Due to large volume of transaction of the company, the audit engagement team CA Raj realized that it would not be feasible to audit each transaction separately during the financial year under the audit. So what is happening? This company Joy Limited is dealing in trekking essentials and Raj is the auditor. And because there is a large volume of transaction, they think that they cannot cover all the transaction. Now in such case, we'll always use the audit sampling. We always go for the audit sampling. That is how it is actually. Okay. So the audit engagement team of CA Raj means article assistants and audit staff. Okay, they are called as engagement team. Now these article assistants, they decided that it is not feasible. So therefore the engagement partner decided to apply following audit sampling technique. Now what is audit sampling, students? It is nothing but application of audit procedures to less than 100% of transaction. Okay. So here what happens is that, so there are some techniques. What are the techniques? Random number tables were used for selection of sample for power, telephone and fuel charges. See, random number table, it is a mathematical table generated by a application, by a software, by a computer. So it is more of a computer driven. Okay. Then no structured method of sampling was used for office stationery. Okay. No structured method means it is haphazard selection technique. Then transaction exceeding 8,000 were selected for travel expenses for a amount exceeding 8,000 rupees. So this is more of a going on a stratification basis of selection, or it could be even on a ground of value weighted selection. So they fixed an amount. The first 200 sale invoices from the sale books for the month of July were selected for the sales. So they have selected first 200 sale invoice. This is more of a contiguous way of selection. Contiguous means continuous way. So this is more in the nature of the block selection technique. Mr. Suresh, one of the team members, compared the salary expenses incurred by the company during the current year with those of the previous 5 years. He noticed significant percentage increase in expenses. This unusual increase raised doubt in his mind. So there is a substantial increase in the purchases. He decided to compare such increase in salary expenses with the increase in the number of employees. So here he is applying analytical procedures. So analytical procedure refers to evaluation of financial information through analysis of plausible relationship between the financial and non-financial data. The company is having warehouse at 2 locations. CA Raj is planning to attend the physical inventory count process. The inventory includes what you can say the finished products such as trekking jackets, bags, shoes, and raw material like leather, cloth, chemicals. Some of the inventory is also held by a third party. Now, during the discussion with the team members regarding the sufficiency and appropriateness of audit evidence, they agreed that sufficiency is a measure of quantity of audit evidence and appropriate is a measure of quality of audit evidence. So Joy Limited operated 100 stores on rented premises across country. Is in the process of expanding. Although rent expenses have been accounted for, auditor requested management to provide all active rent agreements for the year under the audit for detailed examination. So if you see this question is revolving around 3 standards on auditing. One is SA 500 audit evidence. Audit evidence is the information used to draw the conclusion. Then it goes across SA 520 analytical procedures where you analyze the financial information through analysis of plausible relationship between financial and non-financial data. And also it is talking about SA 530 audit sampling where application of audit procedures to less than 100% of transaction. Now which of the sampling technique were used for the following? Like say power, telephone, fuel charges, office stationery, travel expenses and sales. So you have to give in the order. So first is they give random sampling. It is was already highlighted random sampling. Okay. The second one, office stationery, it says that systematic sampling, monetary unit sampling, and block sampling. So block sampling, random sampling, they are correct. Okay, block, because in block what happens, you select the items which are continuous in nature. They have selected 200 items. In random, they clearly highlighted they are using random number table. So it's a random sampling technique. Now let us see the option which is between A and C. It will lie between A and C. The second option B, let me go back to B. So no structured method used for sampling for use for office stationery. This is more of a haphazard selection technique. Haphazard selection technique. So here, what happens? If you see, the second option is haphazard selection technique. And third one, they have selected traveling expenses above 8,000 rupees. So that's a monetary item they have fixed. So C is the right answer. Random sampling, haphazard sampling, monetary unit sampling, or block sampling. So C is the appropriate answer. Okay, that's it. Now let us go to the second one. Which audit procedure Mr. Suresh is intended to perform by comparing salary expenses? So comparing salary expenses here, if you see, you have test of detail. Test of detail, what happens? You select the transaction with the document evidence. A cannot be the answer. Test of detail, you check the transaction with the document evidence. So here we are not doing that. Test of balances, that is also not being done. So there you do verification of the balances as per the balance sheet item. That is also not the thing. Then you have test of control, we check the internal control. And for D is substantive analytical procedure. Here he is applying analytical procedure. See, when he does a comparison between current year and previous 5 years, it is more of a analytical procedures. Okay, it is more of a trend analysis. So to see test of balances and test of detail. Test of detail, when you check the transaction with the document evidence. In test of balance, you take the balance sheet item and compare with the documentary evidence. So that cannot be done. Test of control, you check the internal control. So here the answer will be D, substantive analytical procedure. Very good question they have asked. Which of the following is not a part of CA-ROD's responsibility with respect to inventory held by the third party, which is not a part of ROD's responsibility. See here, students, you have to be very careful. They are using the word not. They are using the word not. It is not the part of responsibility of the Raj when it comes to inventory held by the third party. First of all, A, CA Raj should request for confirmation from third party regarding the quantity and the condition of inventory held by them. This is very much correct, because when the inventory is held by third party, definitely he can ask for confirmation. CA Raj should perform B. CA Raj should perform independent valuation of inventory based on solely on the company's internal records actually. So this I have to hold it actually here. Then C, because this is not highlighted in the essay 501, audit evidence, the specific consideration in relation to existence and condition of inventory. C, CA Raj should request third party to allow him to physically inspect the inventory held by them. This also he can do. And D, CA Raj should review the terms of agreement between the company and the third party to understand the responsibilities related to inventory management. So this also can be done. So here B is little incompatible. Okay. Otherwise A, C, D, they are going as per essay 501. That is why we go for option B, which is not a part of Raj's responsibility. Okay. That's the thing here. Let us go to the fourth question. Which audit procedures were used by my CA Raj while collecting all rental agreements? Which audit procedure he is using actually here? So he is collecting all the rental agreements actually. So here in this case, my dear soldiers, when you're checking all the documentary evidence, so this is more of a, what you can say, test of detail. And now the test of detail is a macro audit procedure. Now micro audit procedure, they have given option. Okay, you have inspection, analytical procedures. So when you are checking the transaction with the documentary evidence, here it will be more closer to inspection. Because in inspection, what happens, you will inspect the assets, the liabilities, the transaction, the documentary evidence. So this is more of a inspection. Whereas analytical procedure, it is more of analyzing the transaction. It cannot be done. Pre-performance, it's an auditor independent execution of the work. So it cannot be done. This is not independent execution of the control which is originally performed by the management. This is also not happening. And it is not an observation. Observation, you look into the procedure followed by the management. So that is why it is ruled out. So here inspection is a right answer. Fifth one. In the given case, the audit team of CA Raj discusses sufficiency and appropriateness of audit evidence. In the context of Joy Limited's audit, the team was considering various factors affecting the sufficiency of the evidence they gathered for the large volume of transaction. Which of the following is not a factor that would influence the auditor's judgment on the sufficiency of the audit evidence? That's the thing. So, look at the question clearly. Which of the factors will not affect the or influence the auditor's judgment on the sufficiency of the audit evidence? So first of all, now sufficiency and of audit evidence, what factors will affect the sufficiency? Materiality of transaction, yes, this will affect. Risk of material misstatement in the financial statement, this also will affect. Size and characteristics of the population being audited, this also will affect. The type of products Joy Limited manufactures, trucking essentials, this is totally ruled out actually. This is totally ruled out. So A, B, C definitely affect the sufficiency of the auditor. So to decide that whether sufficiency of the transaction. Similarly, any fraud and error, that also can be taken into consideration. But D is totally out of context. So if you see, my dear soldiers, the two questions, they had the word not. You have to be very, very careful when you are reading the question and selecting the options. Okay. With this, I'll conclude the session. I'll see you in the next video. Thank you very much.